Hey everyone, Dalton Grados here with Grados Capital, another weekly newsletter for the week of October 20th of 2025. So let's look at this market, and it's pretty simple for me this week. So last week we talked about our big red drop, right? That's where we started last week because this happened the Friday 2 weeks ago. So last week's newsletter, we talked about this drop, how we were opening up. And we didn't really see ourselves going below the low here, which of course was the 65.50 level, which was a key level because it was an area where previous highs in here had held. And let me just clean this up here and remove my drawings. So yeah, we see that 65.50 level being a support where our previous highs were. That's where the tariff shock against this big drop here from Friday before last was from Trump, tariffs with China sparking up some news there. And as has been the case in traditional Trump fashion, he tends to say shocking things and then back off. And that's kind of what's been happening. So we've been staying in. Now, what's interesting is last week we've just been consolidating within the range of the big red candle. So for my levels for this week, I'm going to be focusing on the big red candle. Below the lows here, if we were to break this low of October 10th, that's a short. And then if we were to break the highs, well then obviously, yeah, we're making new all-time highs there, right? So that's pretty simple to me. Now what's interesting is you have this trend line here, which we previously had on the chart of these lows, and that was broken with this shock October 10th candle. Testing our 65.50 key level of previous highs. And then now we're really just balancing in between, kind of chopping around, deciding are we going to go above this trend line again, or are we going to go below this trend line again? It's really just chopping in the middle there. And so what I would say is that we want to look at, and again, this will just to keep this clean, is we want to look at this wedge here. All right. All right, nice little wedge here. So we're going to be consolidating within this red candle. And we are having some ascending lows and some descending highs. We're making a little wedge here. Breaking out of this consolidation is really going to form our next leg to either the upside or downside. I personally have a bias that I think this low is pretty secure because, like we were saying with the tariff announcement, now it's backed off. It's not as bad as everyone thinks it is, just like we saw back in April, right? The story keeps repeating itself. And I think, Trump is a little bit more predictable than maybe some people would like to admit. Some people think he's just a wild, crazy man that's like a loose cannon. I could see, where you would think that, but as we've seen historically, we can kind of see the same patterns playing out over and over again. This one to a lesser extent that we had back in April, but still kind of the same thing. We also have the same pattern in the NASDAQ here. I just pulled up a NASDAQ chart. This is the big tech names that really lead the market. Similar pattern, big candle, very tight consolidation, short below, long above, and try not to mess with much in the middle. It's basically as simple as that. Now, let's move on to our world news, economic events, everything that we need to know. So obviously, government shutdown is still going on. It's the third longest in history, according to this article by CBS, which was last updated today. There is no end in sight. What does that mean for us? Well, that basically means that we're not going to get our economic data, things like CPI, unemployment, all of that stuff. We are not going to be getting that. So, when we do get that, there are potential for market shocks as we get that updated data. Now, moving on to earnings, we are going to be starting to get some bigger tech names reporting earnings. Now, obviously, there's companies reporting earnings, all over the place, but we're really only focused on the big names that are going to move the market. So Monday is nothing. Tuesday, we do have Netflix. Okay, that's a big tech name. GE, Coca-Cola, Philip Morris, also big names, but again, more in the value space. Not going to typically drive the markets as much as the big tech names. Tesla, we have reporting Wednesday, so that will be one to look out for. IBM as well. And then Thursday, we do have Intel. So this will be interesting because this will give us a little bit of insight into the chip space. And so even though we don't have NVIDIA, the name everyone wants to be looking for. Intel can give the market a little bit of some clues. And there's been interesting things happening with Intel lately with the investment into Intel. It really was a lagger in the chip space. Now it's been getting some investment from the government and from NVIDIA partnering with them. So that earnings on Thursday will be interesting to look at. And then some value companies on Friday. Now, the last thing I want to talk about is the Fed watch. So just looking at our next Fed meeting, October 29th, basically 100% chance that we're going to be getting that 25 basis point rate cut. And then the next meeting after that, December 10th, basically 100% chance of a cut, maybe a small chance of a 50 basis point rate cut. So this is something to keep your eye on, and something that I think, as we look at the charts, the market can then begin to shift its narrative to, right? So, if we go back to the S&P here, right, we have our shock and awe of the drop being caused by tariff news. If the market were to get more bullish, it can be because it's shifting its narrative focus to basically forgetting about the shock of the tariffs because, it's a false flag. It's not as bad as we thought. It's the boy who cried wolf. Forgetting about that and looking forward, right? The market's always looking forward to the future Fed rate cuts, which we're already pricing in. The Fed futures, definitely a rate cut of 25 basis points on the 29th of October, and then another cut on December 10th. So that's it for this week. Pretty simple as far as the technicals go. We're just looking for a break of this consolidation pattern. And my bias would lean towards the upside. But if by chance we do break this October 10th low, you better short the heck out of that. All right. I will see you guys next time. Don't forget to like, comment, subscribe to the YouTube channel, and subscribe to the newsletter if you haven't already. First link in the description. That ensures that you get my newsletter, whether it's a video like this or in written form, delivered every week to your email inbox, totally free of charge. Thanks for watching.